Guys, I want to welcome you to another episode of the Advisory Board podcast, where we bring in experts from the franchising community who can give you actionable advice that's going to help you to build a strong and healthy brand. And I've got with me a friend of mine, Chris Baker. Some of you guys may know him already from Franchise Flippers. And Chris, if you don't mind, I'm going to brag on you just a little bit so people know why the heck is Chris on here, right? It's not just the good hair and the cool accent. Like Chris, more than just 30 years of experience in of combined experience in the franchise industry with his partner, Chris actually brings a lot to the table today. Because the topic first that we're going to talk about is how five things that everybody has to know about this. Some people are calling it the boomer retirement crisis and how it's going to impact franchising. And so let me tell you why you should care about what Chris has to share. So he's president of Franchise Flippers, and a lot of you guys are probably working with him already. So if you don't know who they are, they're building the world's largest resale network or platform for franchise resales. Most brands don't want to do that. They don't want to deal with it. They want to sell the new ones. And so he's built a really good ecosystem to help support commission-free franchise resale opportunities. They have more than 350 franchisors working with them, hundreds of franchisees. It's an incredible ecosystem that he's building, and he's the one that we were talking. What was it, a month and a half ago, Chris? And you're the one that said to me, just almost nonchalantly, that it's like 60% of all franchises are owned by boomers right now. Isn't that right?
That's correct. Yeah, 62% is the latest survey uh,
Man,
of 830 something thousand franchise units across the country. 62% are being run by boomers as old as me.
so almost a half a million, right?
Right.
Yeah, that's crazy. Well, I've got to tell everybody one funny thing about you too, and I'd like for you, if you don't mind, start with the funny story. But one thing that you don't know about Chris is he once lost his job because of the actor Bill Murray. So why don't we start with that, and then we'll jump into the topic together today, Chris.
Yeah, it's great that you remember that. When I first came to the States, I'm from England originally, and about 30 years ago, I came to America. Love this country, by the way. What a land of opportunity. I can't think of anywhere else in the world where I could have done the crazy things I've done in business and had access to capital and a great attitude as I do in America. But my first job here was valet parking cars at a hotel called the Brown Palace in Denver. And it's about all I could get, a young punk like me, but I was parking cars there, and Bill Murray stayed at the hotel. And Bill notoriously would tip $50. Now, this is 30 years ago, tip $50 every time his car came up. And so it was my turn on the rotation to drive Bill Murray's rental car up to the hotel. And he didn't come out of his room. He waited forever. And I sat outside the hotel in the car and waited and waited and waited. And he never came down. And I wanted my $50. And so, anyway, my boss in the motor pool there came over and said to me, "You need to go park cars. You can't wait for this tip." And I said, "No, no, I'm going to wait. This is the biggest tip I'll ever get. I get to meet Bill Murray." He said, "No, no, you got to park cars." I said, "I'm not going to do it." And he looked at me and he said, "You're making a career decision." And so I took my little clip-on bow tie off as a rebel, undid my shirt and threw the bow tie at him and said, "Career decision made." So even though Bill wasn't entirely responsible for it, I like to say that I lost my job, and I did get the $50. The doorman of the hotel collected the 50 and gave it to me. So I used
That
that. I used that as seed money for my first business. So there you go.
that's amazing. Yeah, it was a career decision, wasn't it, that
It
day?
was. Yeah,
Yeah.
thank goodness. Yeah.
Yeah, good. I had a good friend once who told me when I was in my first tech job, right out of college. In fact, I hadn't quite finished my undergrad, and he said, "Look, Dave, he's this really bright guy. He's a sales engineer for the tech company I worked for." And he said, "Nobody's ever become rich as a W-2 employee."
Mm.
And that's sunk in deep as I was a young buck, trying to make my way and feed a family. And it's always stuck with me. Entrepreneurship is the key, right? Really.
Yeah, when you look at true wealth in this country, it's on the backs of entrepreneurs.
Mhm.
You could look at celebrity wealth, and with the exception of folks like Taylor Swift, most most wealthy people did it one entrepreneurial endeavor at a time, whether it be SpaceX or Amazon. It started with a person with an idea.
Mhm. Yeah, and even guys like Shaq, I mean, how much more has his net worth grown through entrepreneurship, building out franchise brands, and just selling shoes or playing basketball, right? It's impressive. It's
Because
impressive.
it's why I love the franchise space. It's Main Street America. This is local business owners, not big corporations, local business owners operating businesses in their community, giving back to their community,
Mhm.
sponsoring Little League. This is where this is truly what makes America great, is that Main Street entrepreneurial endeavor. And I'm blessed to be able to work with franchisees who are looking to exit their businesses when the time is right, and also large franchisor brands. So I get to sell and work with independent local business owners and some of the largest brands in America, 350 brands now.
Wow. Yeah, that's incredible. When you told me that number, I was actually a little surprised that you guys have grown that fast. But and then again, not really surprised because you guys are incredible. And this is like it's like the redheaded stepchild, right, of franchise development, franchise transitions. The last podcast I mentioned to you right before we started recording, just recorded an episode about how critical it is to have succession planning in place and for franchisors to start taking an active role in this discussion. So this is like almost a part two unintentionally of that discussion, all based upon this fact that almost 500,000 franchises are going to need to be transitioned in the next 5 to 10 years.
Correct. That's
Yeah.
right. There'll be more resales. I think I read a stat that said there'll be about 57,000 resales and transfers this year, versus only about 17,000 new unit sales. It's just a bigger opportunity than,
Yeah.
or a bigger problem to solve than new unit sales. And of
Yeah.
course, resales can actually feed into new unit development. Maybe we can touch on that later. But look, it's a real problem. The gray tsunami is coming. A lot of folks will be exiting systems. It's no surprise when franchise systems now are 20 to 30 years old, many of them, and folks are coming up on their third renewal, and they're not sure if they can withstand another recession. We've been
Mhm.
through 3 recessions for most franchisees, and a pandemic. And so the question is, can I double down again? Can I keep this going another 10 to 15 years and re-sign? And unfortunately, outcomes are inevitable. And whether or not somebody needs to sell, which is what we never want to see, or
Right.
want to sell, which of course we want to get ahead of, um, outcomes are inevitable. Something will happen in the end, Dave. I mean, you're going to have to sell because circumstances change, or you're going to want to live the back half of the American dream, which is to sell out for maximum profit and go do something different.
Mhm.
But any franchisor now who ignores this is going to be sorry in 2 to 3 years when they don't have a great strategy in place. And that's compounded by the fact that same store sales, unit economics,
Mhm.
it improved by about 23% on average. So when you get a new franchisee into a territory that has been run for X number of years,
Yep.
revenues and royalty revenues go up, and
Right.
everybody's happy and all boats rise. And when private equity is looking at buying a franchise system, they want continuity and consistency of revenue, royalty revenue.
Mhm.
And they're starting to ask the question, what about the bottom 10 to 20% performers? What can we do to improve royalties?
Yeah.
And the very bravest franchise systems now, when I speak at conferences for systems, I've had CEOs of some great systems stand up and say, some people in this room will not be here a year from now, and that's okay with us. Go be happy somewhere else.
Mhm.
But for those of you that feel like it's time to move on, let's make it easy. Let's bless and release you. And it's about letting people exit with dignity and grace.
Yeah. Yeah.
So
Agreed. And also before they lose their last shilling, right? Like it's some people will cling desperately to a sinking ship rather than just swim away from it and grab a log and float off on a current. Like it's okay. Most entrepreneurs I know who have hit it really big have failed first at something or two or three times actually before they really succeed. So it's okay, but it's not for everyone, and every brand's not for everyone. And some people will go be crazy successful in a health spa business where they couldn't get a painting franchise off the ground to save their life. It's just I don't even have the answer. I'm guessing you don't either. But sometimes they need to go be successful somewhere else. I love it.
well, it's about preparation. It's so sad to me when multiple times a week a franchisee approaches us or a franchisor sends us a franchisee, and we hear that they've got 2 to 3 months of money left, or their lease is coming up for renewal, or their franchise agreement expires at the end of the year, and they say, Chris, I need to sell now. This is out of my control, and I have about 60 days. Can you find me a buyer? And the reality is, it takes 6 to 9 months on average to get a franchise business sold.
Oh,
And
wow.
if I could encourage folks now, a year ahead of time, at minimum, start to think about what your future looks like. How much money will be enough?
Mhm.
Your aspirational value for your franchise business. If you can't get there from here, what are you going to do to close the gap? When we do valuations, we value a lot of businesses, and there's often a gap between reality, what we say the business will sell for, and the
Yeah.
aspirational value of the franchisee.
Mhm.
So at times we're telling people, don't sell now, stay the course, follow the system, grow for a year, and then we'll revalue the business, and maybe you'll be closer to your exit price.
Mhm.
But it's just about it's all in the timing.
Yeah.
Get ahead of it before somebody else does.
Yeah. Well, and let's talk about a few things. And one topic, I'm going to spring a surprise on you because I know it's a challenge for people, but let's talk about a few things. One, we've mentioned the gray tsunami. We've mentioned the challenge, but uh, um, can we talk down the road a little bit? I think let's talk about a tale of two franchisors. And this is obviously hypothetical, but I think you guys will track really well. If I'm franchise brand A, and today I decide to put my head in the sand and not think about the gray tsunami that's coming down the road, and just sell you new units and focus on trying to grow the top 35% AUV, and maybe I'll put a program in place for the middle third, and I'm just not going to worry about the bottom third, which might include a whole bunch of retirees that are kind of fat and happy. um, let's talk about that path and the head in the sand approach versus franchise brand B, which might be the same size today, and decides I'm going to have a proactive approach. I'm going to dive in and start looking at helping to develop a process to resell these low performing units, especially because many of them are elderly and ready to get out, and or the people that aren't, right? They just aren't invested. But what do you perceive? What are the if I'm franchise A, where I've decided to put my head in the sand, what are the repercussions of that as we talk about the next 3 to 5 years? I mean, obviously, unplanned exits or non-renewals, right? Which isn't a good plan. It isn't good for that. But tell us more. What do you perceive? You're an expert in this area.
Hmm. Well, you could start with the FDD and the impact that terminations,
Mhm.
non-renewals have on the FDD,
Yeah.
on validation calls. If I'm unhappy in my system, how a validation call is going to look. Then, of course, nobody wants to see this, but a closed unit, customers outside a massage business, and there's nobody there to open the doors.
Yeah.
And so it's very tangible, real brand equity damage from units closing unexpectedly. Um, and then there's the goodness of brand. There's the idea that, look, we have to tolerate some failures. In a high growth franchise system, we know that we sell franchises to people that in our hearts maybe shouldn't have bought that franchise.
Mhm.
We see this a lot with multi-unit operators.
Mhm.
Somebody buys a gym concept, and they open one, they have the rights to open three, and they never do. And they come to us and say, can we get our money back from our franchise fee? And so that's painful for everybody.
Mhm.
Uh, and so I would say now, franchisor A, who's not getting ahead of it, the FDD is going to suffer. Um, Unit economics across the entire system will suffer. If there's PE looking at the business, they're going to want to see a higher return on multiples. And so average unit volume matters. But nobody wants to see failures. And it doesn't take a lot to get ahead of it. It doesn't take a lot for a brand to stop the revolving door of exiting franchisees just long enough, pause the wheel for a minute, and put a strategy in place to let people leave.
Mhm.
So
Yeah. I appreciate it, and I think you're going down the right path. What happens to I mean, you mentioned AUV, but what happens to AUV for somebody who's got, let's say, 3, 4 years left on their contract, but they're done. They're tired, or they start getting ill, or whatever the case may be. It's the challenge of the gray tsunami isn't just, and this is the sad side of it, right? Is they're starting to fail in health and wellness and energy, right? They just don't have it in them when they're 65 to finish out the next 4 years of their contract, right? And
Mhm.
what do you also perceive the impact on the actual AUV, the volumes of the franchise system as a result of maybe not getting ahead of it and just kind of letting people, you what do you say, kind of last out their contracts?
Yeah, which is complete apathy, which
Mhm.
if you're not growing, you're dying. I'm getting my pilot's license now, and one thing we know is you need altitude and fuel in the plane. And if you're not focused on the horizon and keeping altitude and making sure you have fuel, which is growing your franchise business, you're
Mhm.
essentially dying. If you're not outpacing inflation, you're dying.
Yeah.
Um, and so what does that look like? Apathy. I bet every person on this call can picture in their mind a franchisee that they really want to never see again. And it's not always a bad person, it's low performance or it's average performance.
Yeah.
And who wants to be average? The only people that want to be average are mediocre people. And so if we can encourage all boats to rise or give people an exit strategy or a path to move on and be happy somewhere else, everybody wins. But yes, lack of energy. We're getting older. We're fat and happy, as you called it. We're
Mhm.
making okay living. And here's what's happening: clients in that territory are not being served.
Mhm.
As
Yeah.
a business owner, I cannot stand an unserved market.
Mhm.
If I'm mowing lawns and I'm doing 300 a week and the average unit economics are 500, that means 200 people are losing out and getting their lawn cut by my franchise system.
Mhm.
And so it's a very real problem. But I would say to people, picture in your mind the person that you believe should exit today with dignity and grace and make it possible for them.
Yeah, I love it. So let's talk about so you work with 350 brands. So you've got to have some shining examples of case studies. And obviously you don't need to share names unless you've got permission to, but what are brands that are thinking ahead of this? What are they doing now? What's working well as they're trying to establish this, get ahead of this wave of retirees that they're going to have?
The smartest brands are engaging with us and getting digital assets from us to be able to share with their franchisees that
Mhm.
explain all of the options for moving on when the time is right. They're investing in the programs. They're having us speak at conferences. We're doing more and more webinars to the entire franchise system. And our webinars are designed to get people thinking about the future 2 to 3 years out. It would be a
Mhm.
big mistake for me to stand up in front of a franchise group and say, sell now. But they're preparing for the future. Some of them are offsetting the cost of some programs. So they're actually using their transfer fee to reimburse the franchisee at closing for the services we sell the franchisee. So some are investing with their time with webinars and having us at conferences. Some are offsetting some of our costs out of transfer fees. Um, but the bravest ones are just saying it's a reality. People will be leaving, and we can
Mhm.
control this outcome if we get the right partners in place.
Yeah.
So look, the broker networks aren't getting this done. The
Yeah.
reality is that smart systems have figured out that medium performing franchisees can't always afford the commissions that business brokers charge. Most business brokers don't want to sell a business that doesn't have $150,000 in EBITDA. That's a tough business to sell. So there's a void in the broker world where franchisees either cannot afford or do not want to part with 15% of their money. And so we're filling that gap. And then exclusives. The broker community typically wants a 1 year exclusive with a franchisee
Mhm.
and ties everybody's hands, and the franchisee's revenues go down. They take their eye off of running the business in that year. And
Right.
so we don't like exclusives. So the Brave systems are just simply getting ahead of this. They're announcing to their franchise body, there are options when you're ready to sell. And if you could know if, when, and how to sell, even if it's 3 years ahead, that's a winning formula.
Yeah. Yeah, I love that because people need to think that far ahead, really. I mean, what you'd mentioned that business brokers are a little hesitant to pick up a project where there's less than 150 to 200K of EBITDA.
Mhm.
Um, that to me doesn't sound like a very mature franchise, but I'm guessing there are plenty of them out there. If there are bottom performers, there are probably quite a few. that are going to struggle to exit if they don't have that much. How do what should a person who's looking to exit, or how can a franchisor help educate their franchise owners about the value, how to value their business? From many of the people I've spoken to on the funding side, with others who we've talked about succession planning, and you and me previously, it seems like there's a gap there. Like what's a reasonable way for a franchise owner to determine what they should be expecting for an exit?
Mm. Well, you could look at industry norms, and we know that franchise businesses typically sell for between 2 and 5x multiples of seller discretionary earnings. Most systems have historical data from resales that they will share with franchisees. It's a gray area as to whether or not a franchisor should be involved in those discussions.
Yeah.
And they probably should not be telling a buyer that you can make this much money from this franchise business when you buy it.
Yeah.
So I'm sure frandev guys on the phone will say, yeah, we don't really want to get involved in those discussions. So what we do is we poll the franchise, or we come up with average unit transactions. So we'll look at their historical numbers. We'll see how many resales have been done over the last 2 to 3 years. We'll aggregate the data. And then when we're valuing a business, we charge $800 to value a business. We're going to take into account some of those historical norms. And then layer in, of course, comps from the local market, comps from franchise space in that particular industry vertical, and non-franchise businesses. The other thing is it's not linear in terms of multiples of EBITDA. There are breakpoints. A business that makes less than 100,000 is challenging to sell. Over $1 million in EBITDA gets a higher multiple. And then as you go up from there, it doesn't track linear. The much higher multiples on higher EBITDA.
Right. Yeah, it's interesting. I mean, personally, going through a process right now, we bought a couple of territories. I'm selling one too. So it's been a little difficult to figure out. It's in an emerging territory. We've actually got some pretty good revenue pretty fast. How to value it reasonably, and in the industry it's in, I've looked at comps, looked at some industry trend data, and also tried to evaluate, like, with it being a little smaller, like what's a reasonable multiple on the business, on the EBITDA. So, but I've had it sounds like for concepts. So this is what I've personally seen. Some concepts that don't have inventory, don't have hard assets. A lot of franchise concepts aren't. There's a little bit of equipment, maybe a truck. Some of them it's not even that. It's a truck wrap, and you're out selling services, and then you deliver services, and that's really the value of your business. It seems like there might be a little bit of friction in the space for funding. How do franchise owners that don't maybe have all the tangible assets as part of their business, like a storefront and equipment and things like that, how can they approach structuring the deal in a way so that SBA will pick up the deal? Because SBA seems like they're pretty resistant to non-asset typed businesses.
Correct. Harder to get, generally speaking, harder to get an SBA loan for a resale than a new unit, which is ironic, isn't it? Because there's no revenue or assets in it.
Agreed. Yeah.
Also not a track record of mediocre performance. And things are compounded now in an election year with interest rates on SBA loans hovering around 10% and a restriction on lending. It's challenging, and nobody wants to buy a resale franchise with cash. If I'm going to buy $1 million business today, I'm going to buy it with $200,000 of my own money. Look, here's the reality. There's really three kinds of resales we see. There is the highly profitable business with tangible assets in the business that can be leveraged, or there is a multi-unit operator who is buying another unit who can go to Apple Pie Capital and leverage the current operating unit, borrow against it to buy the new one. So well-run businesses are easily funded. The gray area is the service-based business, what we used to call chuck in a truck. So where the only assets in the business are the vehicles. Well, a buyer isn't buying the asset. They're buying the business and the cash flow it produces. They assume that the vehicles, the wrapped truck in your case, are just part of the deal. So the idea of asset purchase is not an asset-rich transaction. It's mostly goodwill. And then we see on the lower end of the spectrum, the unopened territory, which is completely unbankable.
Yeah.
And what I'll tell you now is that we see unopened territories valued at, or rather buyers will buy them for about 50% of the original franchise fee.
Wow.
Yeah, so it's look, you're narrowing the aperture of buyers. I come at this from a buyer perspective.
Mm,
Would I want a business? Would I want a franchise? Would I want it in this particular brand? Would I want it in this territory? And do I want it when it's unopened, when I could open one across town?
mhm,
Worse still, do I want to buy one that's losing money? And so, am I willing to step into an asset purchase and buy a territory in a business that doesn't make any money? Um, so, I would tell any seller, any franchisee, would you buy the business? If so, what would you pay for it?
mhm.
But it's the $1 million question in every franchisee initial consultation we have. Do you have a sense of what your business is worth? And a lot of the time, the answer is, well, I'd just like to get my money out of it. I'd like to get my money back. Well, that may not be possible.
Yeah. May
I
not be.
had a franchisor tell me this week, we feel like you guys slap the babies. You deliver bad news when maybe we can't. It's very difficult for the frandev department to tell you 2 years after you open your franchise that you've lost money.
Mhm.
Uh, and so they rely on us to have those tough conversations.
Yeah. Yeah, it's true. It's true. Well, I appreciate that. That's and you know, I have heard great things about Apple Pie Capital, just to throw a little love that way, because it seems a little silly that if you're going to go get an SBA loan for a brand new business and you're buying two territories, they're going to fund you not only the all the franchise fees, but also operating capital and anything you need to be successful to start. And then that same territory, or those same two territories, 6 weeks later, they wouldn't fund to have somebody else buy from you. Like, it just seems a little bit ridiculous to me. But it's, yeah, it's okay. But there are alternatives. So are there other alternative programs that people should be looking at? So obviously, raising funds, special purpose vehicles, if you can find something like a bridge syndicates or someone who does that sort of a thing. What are some other creative financing ways that people could look at selling or funding a resell if it doesn't fit into that heavy asset or high profitability, high EBITDA category?
A lot of systems will waive transfer fees, so that
Mhm,
narrows the gap on lending versus asset price.
mhm,
Uh, owner carry, owner financing. We're
mhm.
seeing a lot more this year than we ever
Yeah.
had. So with some very stringent requirements around the owner carry, the problem with owner financing in a franchise system is if you're securing it against the acquired assets, is the franchisor going to let you take the franchise back over if the
Mhm.
buyer defaults? Um,
Yeah.
so gray area. So make sure
Wow.
that if you're doing an
Mhm.
after acquired assets or some kind of security in the business you sell, that the franchisor would welcome you back at some point. Um,
Hmm.
I
I
I don't
hadn't, yeah, frankly, I hadn't even thought about that aspect of trying to resell a franchise. Yeah, if owner financing it's so easy, right? And for anybody who doesn't know what that means, they might bring, let's say you're going to sell your franchise territory for 500K, and so they bring $250,000 to the table. You finance the $250,000 yourself, and they essentially pay you. Let's say it's 50 grand, so what, $4,800 a month for the next 5 years or something like that.
Yeah, that's right. If the franchise is cash flowing, that what we typically see is you look at a $1 million deal, the buyer brings a couple of $100,000 and they hope to get an $800,000 loan. And when that only equates to 500,000, then the other 300,000
Yep.
can come to the seller and they'll
Yep.
finance that over the course of typically not more than the current franchise agreement term.
Mhm.
You advise against continuing to support leases. I don't like when I see a franchise deal sold and the former owner stays on the lease as a guarantor.
That's a risk. Yeah. I mean, that you're not really getting out of the business at that point, right? Because they're going to come hunt you down for money if that business fails.
So I think it highlights the fact that with almost every franchisee we engage with, valuation $800, we also put in place an exit roadmap. It's our
Mhm.
version of a succession plan. And
Yeah.
these are all the things we look at. We look at financeability of the business for sale, sellability. We actually produce a sellability score that tells the franchisee how likely it is that their business will sell in 6 to 9 months.
Hmm.
And we'll put strategies in place, give them tools and documents to help them get a deal across the finish line, sample letters of intent, etc., for buyers. But
Mhm.
look, the reality is most franchisees have never sold a business, and it can be overwhelming and daunting,
Mhm.
and they expect the franchisor to do all the work for them. And so we filled a niche where for the individual franchise owner who's never done this before, they need a strategy, they need an exit path, they need evaluation, and sometimes they need us to go find the buyer for them.
Mhm.
And so that's the niche we filled.
Yeah, well, I love it. You're spot on. I mean, the valuation part of it alone is critical, right? Because it's hard to know, what I might think a business is worth is not necessarily what the bank is going to think it's worth that's going to be asked to finance the acquisition. And that alone can create a gap. Or not knowing things like go to Apple Pie Capital, or oh, there's some special purpose vehicle options, or you can raise funds with or owner financing. Like these things, unless you've been involved in an acquisition before of a private business, usually you don't know. You're like cash or check, or like you don't know how these things work. Yeah, I love it. Great
And,
advice.
and the greatest brands are there alongside the selling franchisee all the way. They're
Mhm.
nurturing the buyer. They're educating the buyer on the brand. They're coming to discovery day. They're setting up validation calls. They're allowing the new buyer to go along on ride-alongs, etc.
Yeah.
So the franchisor, in most cases, helps. Some don't. Some say you're on your own. You're selling a business that you bought, and go do that and let us know when you get a letter of intent, and we'll maybe sign a franchise agreement with the new person. Um,
Yeah.
yeah, that goes back to your A/B study. The brands that are getting ahead of this have built a transfer program and
Mhm.
are very efficient at it. The easiest way to sell a franchise business is to another franchisee in the system. So
Yeah.
transfers are a joy to everybody. And our role is very simple. Let's value the business, share it with the buyer and the seller, and everybody's work is done. And that's a great transaction.
Yeah, I agree with you. A lot easier for the franchisor as well. You're not losing units, you're not having closures, and it's also typically somebody who's going to buy a business who's already an existing franchise operator has the cash flow to do it, which means they've already worked out the systems, right? So you're going to take the thing that kills me is these low operating units, and I won't mention the brand, but as soon as you said that you talked about everyone's thinking of someone right now, this guy came right to my mind. And he was tying up the entire Houston marketplace for this franchise concept. And he anyway, a little bit of an Eeyore, just wouldn't move, wouldn't get things done, didn't want to change, didn't want to follow the process. He tried everything and it didn't work. And I was like, how is it possible that Dallas is crushing it and you're not? And this is just me as a supplier on the outside thinking at their conferences, like, how can you sit around and complain? You've got one of the best markets in the world right now for what he was doing. And but that's the downside of these guys, these underperformers. That's the Houston marketplace. That should be, 5 territories all producing top dollar. But then you get somebody like the Dallas guy that buys them out and then starts to operate, and bam, AUV jumps through the roof because you had tied up too many territories with a poor operator. So I think this is really critical that we move this way.
It's
Develop.
a refining process for every system. As a
Yeah.
system matures, we've all done this. I've owned a franchise system, and reality was I pretty much sold to anybody in the beginning, and I gave them territories that were way too big.
Yeah.
And 3 to 4 years into it, realized they may not be the best performers, and we went through a purging. And so we called it purge and surge. Let's get rid of folks that can go be happy somewhere else, let them exit with dignity and grace, bring in new people that are excited to grow the market.
Mhm.
And but then you've evolved as a brand to know exactly what the persona of the ideal buyer is.
Yeah. Very, very common. We need to come up with a name for that because it happens so much. It'd be great to be like, that's, the X effect. You'll have to think of that, Chris, in your next keynote. You can describe it and then coin the phrase for that eager oversell, and then realize you made a mistake, then purge and surge, right? That whole flow. It's such a common playbook that most early eager brands fall into.
And there's nothing wrong with it. We need to grow systems. But But at some point, the day of reckoning comes when there are about 20% of the franchisees that need to move on. And it's
Mhm.
okay. But we'd
Yeah,
rather have successful transfers and sales than we would terminations.
right.
And so that's why we exist.
Yeah. I
Everybody, everybody has that franchisee they'd never want to see again. And we all know in our minds the bottom 20% of performers. And this is an operations issue. Operations folks are typically the first people to see the low performer.
Mhm.
And systems have given those ops folks the tools to allow the franchisee to exit. What has happened historically is the operations department has gone to frandev and said, we need these people out. Can you sell their units? And the frandev folks, bless them, say, I don't get commission on those.
Yeah, no, it's true though. It's
I
true.
don't want to deal with that. Yeah.
If you want to know what your people are going to do in sales, just look at what their comp structure says. That's what they're going to do, right? Smart and good salespeople, they focus their energies on what's going to produce the most income for them. It's not resales. So I guess I mean, how often do you see franchise concepts or franchise brands adjusting that, saying, look, like if they want the Frandev team to help with the resale, then they create a compensation structure that actually incentivizes them to get involved. How often do you see that happening?
I would say no more than 15 to 20% of systems have a program in place or a dedicated resource for
Mhm.
resale.
Okay.
Some that's a sunk cost. They're paying a salary to a frandev person to manage resales, and they're offsetting some of that cost from the transfer fee, not
Mhm.
all. Some larger systems have figured out this is a revenue generator. You can, in addition to the franchise transfer fee, charge 20, 30% to the franchisee selling at closing to offset your costs.
Mhm.
That is frowned upon now by franchisees. It's deemed to be double dipping. I mean, I've already paid you a franchise fee. Now you're going to charge me 30% of my selling price to sell this to somebody because you happen to have a Rolodex with a buyer in it. So that's creating a lot of brand friction.
Hmm.
So I say franchisors that are going down the path of staffing a resale department and charging big fees to help find a buyer to offset their costs. That is upsetting some franchisees.
Hmm.
Now, give people choices. As a franchise system, say, look, we offer the following ways to resell. We can do it for you and we charge a fee. You can go to a business broker and good luck with that and pay your 10 to 15% commission and
Mhm.
we'll accept the buyer. Or you can do franchise flipper strategy, which is a hybrid of all of it and a flat fee. And so I like when a system gives folks options.
Yeah. Personal opinion, I think that's the way it should always be. Like let them choose A, B, and or C. At least two options always, but three. And then they're always in charge, right? The business owner who's either struggling or is ready to exit, like the last thing they want to do, and you've said the word dignity 3 or 4 times today, they don't want to feel embarrassed. I mean, they've been an entrepreneur, they've been a business owner, and that's a big deal. And they've become part of their identity. And for that to kind of crumble underneath them at the end of the road, that's a really lousy way to leave. And it also doesn't leave somebody, it doesn't bolster your reputation in the marketplace to have frustrated people who have left and then feel like they got slighted at the last exchange. Anyway.
Yeah, your last encounter was writing a big check at closing and leaving you with nothing, and maybe you still are upside down on your lease and you have a loan you've got to pay off, and
Right.
I'm not going to enjoy doing validation calls. Uh,
No. Yeah.
look at the best systems. Just it's this simple. They want happy, successful franchisees,
Spot
and
on. Yeah.
and that success goes all the way through to when it's time to leave us. We want to bless and release you. We want you to leave with pocketfuls of money and be so happy about us. And that's the bravest systems now are realizing that.
Yeah. Yeah, I agree. Well, tell me what are a couple of highlights, maybe two or three takeaways from our conversation today that you think every brand should be thinking about right now? Something that's actionable that they could do tomorrow that's not going to incur major costs or take major initiatives and efforts. What are a couple of things that they ought to be doing that they could do tomorrow?
Great question. Be candid about the low performers. Start to cohort the all of your franchisees, and instead of ignoring the bottom 20%, really put a strategy in place for how to let them exit.
Mhm.
Um, find a business broker that will work with you, or build a team internally that will deal with resales,
Mhm.
or contract with a company like Flippers to manage the entire thing. And give folks hope that I think we're probably less than $6,000 to get a deal done. So, give franchisees a way to exit for the least amount of money possible. But don't bury your head in the sand.
Mhm.
Right back to our first point today. This is real. It's happening. It's getting worse. 57,000 transfers this year. It's not going away anytime soon. And so apathy will hurt brands.
Mhm.
And there's solutions out there. You know, find one and
Yeah.
uh, and stick with it. That's
Great advice. And I'll add one on to it to reiterate a point. Um, you should probably talk to this man right here. You should talk to Chris. Just because if you can't tell, he's got a wealth of knowledge. This was not meant to be a promotional call in any way, but man, I mean, just the more that you and I have talked about what you do, I've thought, how do you make any money? Like, like because you guys don't charge as much as you could, right? Some people are 10 to 15% of every transaction. That ends up being six figures for a lot of people. And yet it doesn't need to be that way. You've built up systems and processes to help facilitate this with technology and with your background. So anyway, just I'll be promotional for you. I just think it's wise, even if, and I know I personally have referred people to talk to Chris. He doesn't charge anyone to have a conversation and give some guidance. And so, Chris, if people want to get in touch with you to dive into this topic a little deeper and get some strategy in place, what's the best way for them to reach you?
great. Thanks for that opportunity. Franchiseflippers.com. And if you're a franchisor, just find the franchisor tab, and there's a booking link to have a conversation. If you're a franchisee listening and you're looking to sell your business, franchiseflippers.com, seller. Pretty simple. And thanks for that opportunity.
Yeah. Well, Chris, you're both a gentleman and a scholar. Thanks for sharing so much information and experience. It's been fun. Plus, the accent doesn't hurt. So we'll have to do this again sometime. But thanks again for all the advice you shared today.
I'd love it. And thanks for what you do in the industry. You're a great resource to everybody. I love clientele.
Thanks a lot, Chris.
Cheers. See ya.